Welcome back in another week of Talking Technical. And for all those viewers that don't know, Christelle gave birth to a wonderful little boy last week, and we're all happy. And while she's on maternity leave, at least this Opa is working hard to do all the things. But we're just so happy for her, and let she have a nice rest. And she'll probably be back next year sometime. I think not too far in the distant future. So for a few weeks till you've got me on the program. And remember, we close down around the 15th of December and open up again around the 15th of January. So for 4 weeks, from about the middle of December, we will not have the Talking Technical, but then early in the year, around the 15th, we'll kick off again so that we can just have a little bit of a breather away from the charts. But as you know, this hobby always keeps you busy. And it's not a case that you can walk away from the charts. In actual fact, I always take my computer along wherever we go. And I always have a chart or two that I watch, especially the indexes, because sometimes it gives you a wonderful opportunity. Yes, what I would do in this period of let's say, almost closure, I go to longer time frames. So for the ALSI, I'll probably go to at least the 6 hour, the 4 hour, and even the 60-minute chart. But I will walk away from the 30, so that if I go into position, then I know it's really stretched to a point, and that I usually like and prefer. But let's kick off with some requests. And the first one was Haranga Resources, and they listed in the Australian index. And as we know, a lot of our viewers now is just not locals anymore. It's across the board, and they live in Canada and in America and even in Europe. And this person is now in Australia, and he said to me, Frans, can you maybe have a look at Haranga? I bought it a while back, and I'm happy with my profit, but what do you see now? So for me, if I look at Haranga, first of all, it had a beautiful rally from about 12 cents all the way up to 24 cents. That's a nice spike. I mean, that's almost double. But what I always worried about, if you look at shares like this, they usually illiquid, and you can sometimes burn your fingers. So what I always say to our viewers and our clients, if you've got a share that's illiquid and you want to buy or you want to sell, don't just go and rush in and buy it, because you'll probably get a better opportunity by waiting in the system. And this is exactly the case. Can you guys see all these little tiny little candles? We call that dash candles, and that is on that specific day there was just almost no trade, no interest. So nobody wanted to put in a bid or an offer, or nothing changed hands, and that always makes it nervous. So let's say, for instance, you bought it at 12 cents, then you decide on your profit. Let's say maybe you decided that you want to lock in profit at 20. You put your order there, and the day that it spikes there, you're out. But what I see now, I'm a little bit nervous on Haranga Resources, and the reason being, there's a classic candle here, and that is a ugly gravestone doji. That's always not a good sign. And what I don't like about it, it closed right at the bottom. But first of all, the candle then following up just closed this gap. So now we'll have to see. But for me, this is always a classic reversal candle. And the moment I always see that, I just say to myself, be a little bit nervous. Just check it out, because it can easily return. But on the other hand, if it can get above 23 cents, then it can head higher. It can actually go all the way up to 25, and let's say maybe 27. But for me, I will be a little bit nervous if it goes below 19, because my next support will only be at 16, and that is that 50-day moving average. And by the way, some of the commodity counters had some wonderful rallies. This one, not that much, but I mean, this is almost a 100% rally in a few weeks, let's say 3 weeks. So be a little bit nervous, and remember, all the markets, especially the S&P 500, had one hell of a rally, and it can easily surprise you for a period of maybe a little bit of a breathing period, consolidation, or maybe a little bit of a pullback, because everybody believes that we can still see a Christmas rally. But I think we saw the Christmas rally already in November. So let's see, maybe I'm wrong, but just be a little bit careful. Let's have a look at Durban Roodepoort Deep. I mean, this is a a gold mining company. And I like this chart. Slowly but surely, this chart is showing some signs of strength. I just want to remove some of these lines. And the reason why I like Durban Roodepoort Deep, some of the other gold miners, especially like Harmony, already had one massive rally. I mean, Harmony, I think, went up 30% in the last month. But Durban Roodepoort Deep is slowly but surely giving me this wonderful rounding bottom. And if you use a little bit of creativity, you can actually say this is a double bottom. So that I like this chart. And remember, this is a daily chart. But for me, first of all, look at it. The 50-day moving average turned into a support. And what I like about Durban Roodepoort Deep on the fundamental side is that, remember, they've got mines, but most of their mines, in actual, most of their money is coming from refining some material from other mines, like we call it. They will reclaim some slime dumps and then fix those mines up or clean it out. And out of that, they will get some gold. So they actually not a gold miner as such, going 3,000 meters underground, work in hot and difficult conditions. They put it through their plant. So this share can maybe surprise. And the first sign of strength, especially for me, will be above 1709. Nice move above that 1709. It looks like it wants to peep its head above that. That is positive for me. But I mean, this rounding bottom or even this double bottom will only come into play above 1801. Now, above 1801, this chart will really starts to look very interesting, because then you've got a few higher lows, and then you will have a higher high that is positive. And if you look at the target, I mean, let's just do the extension there. And if I look at this chart, it looks like Durban Roodepoort Deep is still quite early in its development of moving to the top. Then maybe we can see the share all the way up to this level of 21 Rand 31 if it plays out in full. The only thing, look at the stochastic, it's maybe a little bit toppish there. So if you do buy it, use the 50-day moving average as your stop loss, 16 Rand 38. And remember always, and it's also important that I think about this, in the period of Christmas, remember the traders are usually not around the desk a lot. Even some of the bigger investors are not very involved in the market. So if you buy and decide on your profit, put it in the market. Don't overtrade, don't buy too much of a share. But otherwise, if you buy it for the long term, it's a different story. That changes the whole scenario. But usually gold shares, you don't buy for the long term, because it's a cyclical share. But just look at it, massive sell-off. And even if I take the trend line from there all the way to the downside, it looks like this is quite bullish to me. And it looks like it even broke that strong resistance line. And that is showing me some nice strength. Let's have a look at Disney. A while back, we called the share on the program. And we said, wow, but it's been hammered to pieces. And what happened since then? Disney put in a beautiful relief bounce from 78 all the way to the top at 96. And now it starts to look like it's a toppish stochastic. There's some shares that is showing some upper shadows. Let's maybe show you there. Let's just zoom it out for you guys. Then you can see there's an upper shadow, upper shadow, upper shadow. This candle is maybe pushing for the top. But for me, these upper shadows makes me a little bit nervous. And look at these gaps. There's a gap. There's another gap. Momentum is quite strong to the top. But for me, first sign of weakness will be below this support. Let's throw it in there. And then, of course, all the candles to the bottom. I'm just going to show you the windows quickly so that you can see where I see them, because sometimes people don't know where the windows are. And they ask me about it, Frans, where is that window? Where does it close? I cannot see it clearly on the chart. That's why I'm showing you. Remember, this section is not always of tips and levels. It's also for educational purposes, so that you can love this passion and get involved with it. And look at it. There's the toppish pattern, but this toppish pattern will only come into play below that support line, and that is 95.59. And if that changes into a resistance, I think we can maybe see a move to the downside. Why? We've got almost a lamp pole formation straight up. And where's the gaps? The gap sits between 92.74. That one closes at 91.54. That one opens up at 90.16, and it will close there at 84.92. And even there is, I also see a tiny little gap. So I doubt if it will come back to that, but remember, there's the 50-day moving average. It turned into a support, but if you want to short it below that support. Where's my stop loss? My stop loss is at 96.51, but I mean a nice recovery after some really hard selling over the last couple of months. Let's have a look at Tesla. I mean, one of those giants of the American market. I mean, it rose and rose and rose, and nothing could stop the share. And if I look at it, I just want to remove those two little lines there. It looks like Tesla is slowly but surely trying to head its way up again. But let's just draw this in. There's the resistance, and there's the support. And what do we see here? We see a descending channel. I know people will say that it's a falling wedge. For me, this gap is maybe a little bit too wide to call it a wedge. Let's rather say it's still a channel. But I mean, it can carry on lower all the way until you've got a narrow gap at the end. Then you can talk about a falling wedge. But for me, look at it. It trades around the 50-day moving average. The 50-day moving average sits at $236.41, American cents, remember. And this chart will only give me a break to the top above 249.24. And I mean, if that can be the case above 249.24, it can go all the way up. Let's just do the projection there, maybe to the all-time high of the share. Let's just do it there. There you are. It will take it actually above that, and that will be 313. What worries me a little bit is that we've got these gaps to the downside, so maybe we're still going to close this gap, and maybe we can head lower into this. And as I said earlier on, remember the NASDAQ had one massive rally, I mean in the last month, and I think if that comes under pressure, Tesla will also come back. I see there's a lot of discussion nowadays. Is Tesla a motor company or is it a technological company? So we never know. But for me, the chart is it's maybe back into this grinding to the downside. Especially, it will follow the NASDAQ if and when the NASDAQ will come under pressure. Let's have a look at Kell Group. It's a local co-op business that's concentrating on the farmers. And I mean, just look at it. And this share is now a classic case of if it's a good company, you'll usually find it gets sold off all the way. And then suddenly one morning, it starts to wake up. And what do we see here? There's the left shoulder. There's the head. And there's the right shoulder. And what happened? It broke the 50-day moving average. It broke the neckline in one day and it went right up to the top. And for me, what is the crucial moment here? This 50-day moving average. It probably had one massive rally now, but while this gap is open, there you are. While this gap is open, and that is between 34.48 and 34.15, the momentum is to the top, because we always say that a chart trades away from the gap. But there's also a rule that we must never forget, and that is a gap sometimes close either today or tomorrow or sometime in future. So yes, it first rallies away and then it can surprise you to come back and to close that gap. For me, I like this chart. And the reason why, we've got a breakaway gap. But for me, if you want to buy it, wait for it to come back to this neckline. Or even I would love for you to come to this 50-day moving average and even close this gap here. Reason why? Because then you've got a left shoulder, you've got a head, you've got maybe a double shoulder and then a way up. Because look, it did play out already. If you just do the projection there to the top, if I do the extension there, you can see, if I just do the extension above the neckline, it almost played, well, it played it out to the T, 36.85, right to the T. So yes, we're looking for a new formation, but this is a lamp formation, maybe a pullback to the neckline, and that sits at 35, and then maybe nibble there but I would love for it to close here. But for me, if I look at this chart, it looks like, although it's a little bit toppish now on the daily chart, I think we're seeing a reversal here, especially if you look at this chart, long downtrend, and now it had a consolidation. Now it wants to blip and wants to peep above that. That is always a positive chart for a share that wants to turn around. Let's do AECI. Let's have a look. AECI. Well, where KAL was now an exciting chart, AECI is starting to show us some signs of weakness here. I just want to draw in that massive support line. You can immediately see that support line. There's the support line. What do we see here? There's a left shoulder. There's the head. And we're working on a double right shoulder here. There's it. Some people will say, but Frans, you miss another head and shoulder. There's the left shoulder. There's the head, and we're working on the right shoulder. So there's maybe a bigger head and shoulder and a tiny head and shoulder. But for me, we starts to consolidate below this 50-day moving average. The stochastic looks very, very lethargic. It doesn't look like it wants to rally. And the 50-day moving average is sitting at 109.61. Below that, unfortunately, the sense or the trend to the share is negative. Where's my neckline? The neckline is that important place there of 105.45. If 105.45 can turn into a resistance, unfortunately, this head and shoulder formation will probably trigger some selling. And where can it take to? Let's do the conservative target first for you guys. But I mean, the share treated you all well. So maybe it's time to think twice of buying the share, or maybe think about maybe locking some profits here. And there's the head to the neckline. And I mean, if it does play out below this level that I just showed you, the neckline, where can it go to? It can maybe surprise us all the way to come back to 98.50. But I mean, look at AECI, classic share, broke above the 50-day moving average, came back to test it, rallied all the way beautifully, and now it's working on a head and shoulder. And as we always know, a head and shoulder formation is unfortunately a topping pattern. Let's look at John Deere. We look at the share every 6-7 months because there's a guy in America that always drops me an email and he says to me, Frans, it's maybe time to buy John Deere. What do you think? Well, this is the daily chart. First of all, let's have a look here. If I do a trend line there's the negative trend line, the resistance. Below it, it is negative. But what do we see here? There's maybe a tiny little double bottom here, but we also see a falling wedge developing here. And a falling wedge, as you know, it's a positive pattern if it breaks above the resistance line. And there you are. There's a gap here. It first needs to go above this gap, and that means it must first carry on. And what do I see here? We see it closed this little gap here. That's quite important. That's a good sign. And this is now classic. First of all, the share traded away from the gap to the top. And what happened now? There's the gap. The share trades away from the gap, and it did close this. So it's positive for me. So for me, first sign, it must get above and close this gap. And where's this gap? This gap sits between 373.34. The gap will close at 379.09. And if it can get above that, that will automatically change this 50-day moving average into a support. So for me, a buy will be above the 50-day moving average, 378.78, because I think by that time, the 50-day moving average and this resistance line will almost be spot on the same level. So I'll use this 50-day moving average as my buying trigger, and I will use that candle as my stop loss. You've got two stop losses here. The one is 361.79, or the low right here of the support, and that sits at 355.66. That's maybe a little bit big, but I mean, it depends on your security or risk profile so that you can see. But if John Deere can break above this 50-day moving average, I mean, where can we go? Let's just do the projection. We take it from the bottom to the top, and there you are. And if I do the projection here, it can take the share all the way up to $406.91. Let's hope it does that. I mean, there's quite a few buys and sells and some nice trading lessons that you've picked up today. Thank you for watching the show. And as always, visit our website, join our subscriptions, because that's the way that you're going to learn and teach yourself. And enjoy the rest of the week, and www.fransdeklerk.com is the place to go to. And if the Lord saves us and keep us blessed, we'll see you next week again. All the best. Bye.